Bitcoin has always been a source of intense speculation and debate. Today, we find ourselves in a peculiar situation. Despite a wave of positive news and developments, the price of Bitcoin remains volatile. This perplexing paradox has left many investors scratching their heads. Is Bitcoin truly on the cusp of mainstream adoption, or are we witnessing the early signs of a bubble burst? The truth, as is often the case with Bitcoin, is more nuanced than simple headlines suggest. While it's true that the price hasn't skyrocketed in response to recent positive news, it's crucial to remember that Bitcoin's price is influenced by a complex interplay of factors. Short-term market fluctuations don't necessarily reflect the long-term potential of this revolutionary technology. The recent string of positive developments in the world of Bitcoin is hard to ignore. The US government is seriously considering the creation of a US crypto reserve, signaling a significant shift in its stance on digital currencies. This potential move acknowledges the growing importance of cryptocurrencies in the global financial system. Furthermore, the announcement of a Bitcoin ETF by Trump Media is a major step towards making Bitcoin investing more accessible to mainstream investors. Adding fuel to the fire are endorsements from influential figures like Eric Trump and Michael Saylor. Eric Trump's public encouragement to buy the dip reflects a growing belief in Bitcoin's long-term value proposition. Michael Saylor, a longtime Bitcoin advocate, has doubled down on his bullish stance, rebranding MicroStrategy with a Bitcoin logo and emphasizing Bitcoin's superiority as a store of value compared to traditional assets like gold. Despite the overwhelmingly positive news, the question remains, why is Bitcoin's price not reflecting this optimism? One contributing factor is the current macroeconomic landscape. The rising yield of US bonds has led to a tightening of liquidity in the market. Investors are shifting their focus to traditional assets that offer guaranteed returns in the face of economic uncertainty. This shift in investment strategy has temporarily dampened the demand for riskier assets like Bitcoin. However, it's essential to maintain a long-term perspective. The current price dip is not unique to Bitcoin. All markets, especially emerging ones, experience periods of volatility and correction. In fact, seasoned Bitcoin investors view these dips as opportunities to accumulate more Bitcoin at a discounted price. They understand that short-term market fluctuations are mere ripples in the grand scheme of Bitcoin's potential. Investing in Bitcoin is not for the faint of heart. Its price volatility can be daunting, but it's this very volatility that also presents significant opportunities for those who understand the market. Instead of trying to time the market, which is notoriously difficult even for seasoned professionals, consider adopting strategies like dollar cost averaging. This approach involves investing a fixed amount of money at regular intervals, regardless of the price. This method averages out the cost of acquisition over time, mitigating the risks associated with volatility. Another strategy gaining traction is setting up automatic buying plans. Several platforms allow investors to automate their Bitcoin purchases, making it easier to stay invested consistently. This set-it-and-forget-it approach removes the emotional aspect of investing, preventing impulsive decisions driven by short-term market swings. In conclusion, while Bitcoin's price currently seems disconnected from the positive news surrounding it, this disconnect is likely temporary. The fundamentals of Bitcoin remain strong as the world continues to grapple with economic uncertainty and seeks alternative stores of value. Bitcoin's appeal will only grow stronger. Remember, the best time to plant a tree was 20 years ago. The second best time is today.